Let's start with an eye-opening fact. During the 2008 financial crisis, U.S. home values fell by over 20%, with some regions experiencing losses of up to 50% in value. To those watching from the sidelines, this may have looked like a time to avoid real estate entirely. However, for investors who understood the cynical nature of the market, this period represented an enormous opportunity. Markets like Miami and Las Vegas, after enduring significant drops, eventually rebounded, creating enormous profit for those who had invested wisely during the downturn. Now, as global and national economies once again face uncertainties, you might be asking, is this the right time to buy, sell, or hold? Economic downturns reshape real estate markets, but with the right insights and approach, these turbulent times can lead to both protection and profit. Let's dive into the strategies that can help you make informed, confident decisions and no matter where you stand in today's real estate landscape. Economic downturns are a natural, if unwelcome, part of the economic cycle. From the Great Depression to the dot-com bubble and the 2008 financial crisis, recessions have repeatedly impacted housing markets. While it may seem daunting, downturns offer unique opportunities and risks that both individual homeowners and professional investors need to understand. For homeowners, downturns often mean a temporary dip in property values, potentially reduced equity, and the need to make strategic choices about when to sell or refinance. For buyers, these periods can present once-in-a-lifetime opportunities to enter the market at a discount, but only if they are equipped to manage the financing challenges and understand the potential risks. Investors, meanwhile, may see downturns as a time to acquire assets below market value, capitalize on foreclosures, or explore unique financing solutions. The decisions made during these times can have lasting effects, shaping wealth and stability for years to come. By understanding the intricacies of the market and preparing to adapt, you can turn these economic challenges into opportunities for growth and resilience. During economic downturns, the real estate market faces several common challenges. 1. Declining property values. In a downturn, home prices often fall due to reduced demand and an oversupply of listing. As economic uncertainty causes more people to sell or default on their mortgages. When property values decline, homeowners who recently bought or refinanced may find themselves underwater, where they owe more on their mortgage than the property's current market value. This can limit refinancing options and make it difficult to sell without taking a loss. 2. Increased foreclosures and distressed properties. Recessions often lead to job losses or income reductions, which can push some homeowners into foreclosure if they're unable to meet mortgage payments. This increase in distressed properties can flood the market, driving down prices down further and making it harder for traditional sellers to compete. On the flip side, this situation can provide buyers and investors with opportunities to purchase properties below market value. 3. Buyer hesitation and financing challenges. When the economy is uncertain, many buyers hold off on purchasing property. They might be concerned about job stability or wary of making a significant financial commitment during volatile times. However, lenders often tighten their criteria during downturns, making it more challenging for buyers to secure financing even if they are willing to enter the market. For instance, after the 2008 crisis, banks became far more conservative, increasing down payment requirements and scrutinizing credit histories more closely. 4. Liquidity cash flow issues for investors. Real estate investors, especially those with multiple properties, may face cash flow challenges in a downturn. If rents drop or tenants struggle to make payments, investors may have trouble covering their mortgage obligations. Additionally, flipping properties becomes riskier in a slow market where homes take longer to sell and profit margins may shrink. 5. Rising costs of ownership. Economic downturns don't always mean lower costs across the board. Property taxes, maintenance, and utilities remain consistent and sometimes even increase. As incomes decline, covering these fixed expenses can become challenging, especially for homeowners on tight budgets or fixed incomes. Understanding these challenges is essential. They can't always be avoided, but they can be managed with the right strategies, which we'll cover in the next section. Now, let's dive into some practical strategies to help buyers, sellers, and investors navigate economic downturns. 1. Strategies for buyers. Market analysis and timing. One of the most effective tools for buyers is to analyze market trends closely. Resources from Redfin, Zillow, and Altus Research offer up-to-date data on listing prices, sales volumes, and time on market statistics. By tracking these metrics, buyers can identify patterns that signal a good time to buy. During a downturn, it's generally best to buy as close to the market's bottom as possible. But remember that timing the market perfectly is difficult. Financing options in a down market. During downturns, buyers may have to explore different financing options. Government-backed loans like FHA or VA loans often have more lenient requirements than conventional loans, making them a viable choice. Buyers can also look into adjustable rate mortgages as a way to secure lower initial payments, though this comes with the risk of higher payments later on. Be sure to consult with a financial advisor to weigh the pros and cons of each financing option during economic uncertainty. Leverage distressed properties. With increased foreclosures, downturns can be an excellent time to purchase distressed properties at a discount. Using resources like CoreLogic and Atom Data can help buyers locate foreclosure listings or distressed sales that might be available at a fraction of their typical market value. However, be prepared for potential repairs and renovations, as distressed properties often come with deferred maintenance and other issues. Negotiating power. Economic downturns are buyer-friendly markets, meaning buyers have more negotiating power. Sellers, motivated by prolonged time on market or financial pressures, may be more willing to negotiate on price, cover closing costs, or include additional incentives like appliances or repairs. Work with an experienced real estate agent who understands how to leverage these dynamics to secure the best deal possible. 2. Strategies for sellers. Setting a competitive price. In a slow market, setting a realistic price is essential to attract buyers. Use multiple sources such as Zillow, Altus Research, and Redfin to gauge the average price range in your area. If possible, get a professional appraisal or comparative market analysis from a real estate agent to price your property accurately and to avoid unnecessary markdowns or prolonged time on the market. Highlighting unique value. Buyers become selective during downturns, so sellers must find ways to make their properties stand out. Invest in high-quality staging, professional photography, and virtual tours to highlight the unique features of your home. Additionally, consider updating high-impact areas like kitchens or bathrooms, as minor renovations can often yield higher returns during tough markets. Providing incentives. Offering incentives such as helping cover closing costs, providing a home warranty, or even including furniture can make your listing more attractive. These perks can be particularly appealing to first-time buyers for those with tight budgets. Working with an experienced realtor. An experienced real estate agent who specializes in downturn markets can be invaluable. They understand the nuances of the current market, have strong negotiation skills, and know how to craft marketing strategies that appeal to recession-wary buyers. 3. Strategies for investors. Emphasize long-term value. Successful investors understand that real estate is a long-term investment, particularly during downturns. Focus on properties with intrinsic value, such as those in stable, in-demand areas or those with the potential for future development. While downturns may impact short-term returns, these properties tend to recover and appreciate over time. Consider short-term rentals. For those investing in residential properties, short-term rentals can offer an alternative income stream during downturns. Platforms like Airbnb and Vrbo allow investors to earn more frequent income from properties in tourist-friendly or high-demand locations. Explore creative financing options. Traditional bank loans may be harder to secure during economic slumps, especially for investors with multiple properties. Alternative options such as hard money loans, private lenders, or seller financing can be viable solutions. These options often come with higher interest rates, but can help investors act quickly on valuable properties during downturns. Investing in distressed properties. Recessions often lead to an increase in distressed properties, creating opportunities for investors to purchase homes at a reduced cost. These properties can sometimes be acquired through auctions, short sales, or directly from banks. However, it's essential to conduct thorough research and budget for repairs, as distressed properties often require significant maintenance. When navigating real estate during economic downturns, the most impactful takeaway is the importance of focusing on long-term value over short-term gains. Real estate markets are cyclical, meaning that downturns eventually give way to recovery. For buyers and investors, this means being patient, keeping an eye on valuable properties, and considering purchases that may not yield immediate profits, but promise substantial value in the future. For sellers, it means holding on, if possible, and waiting for the market to stabilize. In the short term, this approach might feel counterintuitive, but real estate has historically appreciated over time. The ability to see past immediate challenges and recognize future potential can be the difference between financial loss and long-term wealth. Economic downturns undoubtedly bring challenges, but they also offer unique opportunities for those prepared to navigate them thoughtfully. Whether you're a buyer, seller, or investor, having a clear strategy and understanding the current market landscape can empower you to make decisions that align with your financial goals. Remember that downturns are temporary, and each action you take now can position you for success when the market rebounds. Ready to take action? Whether you're looking to buy, sell, or invest, reach out to a real estate professional who understands the nuances of today's market. Don't let an economic downturn keep you from achieving your real estate goals. Instead, turn it into an opportunity for growth and resilience. The right guidance, patience, and strategy can make all the difference in navigating real estate successfully, even in challenging economic times. If you found this guide helpful, Don't forget to check out my other videos on real estate, or if you'd like, subscribe to my channel for more tips and navigating the real estate market with confidence and security. My name is Giovanna, and I'm with the Signatory Group. Thanks for watching. Bye.